This video is in by no means an I told you so, because I am wrong a lot of the time. We were initially expecting to see a push on Nvidia up to $150. The reason for that was all of our requirements were set as we were moving into earnings. Fundamentally, earnings didn't hold up, and there's nothing that we could do from a strategy standpoint. But I do want to go over in this video 2 times now that we have called the top on Nvidia. Last time, Nvidia dropped 22% when we saw this happen. I posted the same setup on Friday, and since then, Nvidia is down 10%. And in this video, I want to share with you the very simple requirement that happened in order to go short on Nvidia, and I want to show you how this can be replicated amongst other stocks. Let's first go over this post I put on X on June 30th that had 277,000 views. This is probably one of the biggest posts that I've ever made on X, and it was most certainly at the height of the hype for Nvidia. Now, I want to explain to you that I am not bearish on Nvidia from a fundamental long-term standpoint, but when we see these triggers happen in the market, we have to be objective. We have to remove our thesis, because even if we believe in a company, even if we think the company's undervalued, if there are not big buyers there who can move the market higher and agree with our thesis, then there's no reason to trade it. In this post, I said Nvidia is looking like the top is in. I never short a strong uptrend, and I didn't short this, just so you guys know. I said we finally see weakness on the weekly chart, expecting an 18% pullback to $105 or $100. Now, the reasoning for that, and when I posted it, we were trading right here. Let's actually move into the next week, right here, on this week of the 24th. Now, if we look at the BX trender, which is going to be this oscillator at the bottom of your screen, you're going to notice that after a massive rally, which we got here on Nvidia last time, normally when price closes with a lower high, so this shade of dark green, it is an indication that the top is in. Now, once again, this does not mean that I'm looking to go short. It just means that in this massive uptrend that we have, there's not enough buyers, not enough supply and demand to overtake and actually continue to push the stock higher. The same thing happened here on July 1st. We see price close with a lower high on the BX trender. That is when I posted this. And now I got a lot of hate for that post, and I understand that that's probably because there's a lot of retail people who are long on Nvidia at the time, probably over leveraged, and they don't want to lose money. And I understand that because I was there myself. Now, if we let this play out, I want you to notice that I was wrong. Like, if I would have shorted, I'd be down money for almost 2 weeks. But if we notice what's happening on the BX trender, because we're waiting for confirmation of the candle close, we see that even though there's a couple of these false breakouts, we're still closing with lower highs on the BX trender. This is the quintessential textbook sign that there is a top, because all of big money, all of those hedge funds who are buying within this level, or better yet, within this level from 56 to 48 post split, they are not going to continue to buy it up when price is this high. Unfortunately, the people who are going to buy it up when price is this high is usually retail, which is everyday investors and everyday traders. So from this point, we were still expecting a big sell-off on Nvidia. Now, where did I expect that sell-off to come back to? Well, there's 2 ways that we can look at this. The first is if we go from swing low up to swing high with our Fibonacci retracement, we're going to notice that our golden zone or our golden pocket is $100 to about $90. So that was the area I was expecting the pullback into. If you don't understand how to draw those, then what I teach my Academy students is to use the weekly market bias. The weekly market bias with our proprietary settings, you can see, is also lining right up with that $100 to $96 level. And if we let this play out, you can see that price pulled all the way into the market bias. And this is where we started to say, this might be the time to go long. Because even though this BX trender is showing lower lows, we know that structure and holding this market bias usually occurs. So going long here at about 91, setting a stop loss at a lower low of about 76, and a take profit back up at 128 is the most optimal way to play this. Now, if we let this continue to play out, you will notice that the next week we get a big push. If you want to learn more about all of the indicators that you see in this video, as well as the proprietary settings and the step-by-step trading system that I've built, you can take all of our courses completely free with the link in the description. Now price closes with higher lows. This is when I became bullish on Nvidia, because last time we had this set up, which, remember, just because it happened in the past does not mean it will happen in the future, but there's a good chance that it will. So we saw about a 44% run within 28 days. I was expecting the same type of movement from Nvidia until we got earnings. And we saw that sell off last week with earnings, and you will notice that last Friday's candle closed lower lows, which is not a good sign. This led me to post this on Friday. I said Nvidia hit the Dinmok death touch. If you guys have ever seen Dinmok, it's basically from Bloodsport. It's a great movie. But it's the death touch, and you do it by hitting only the bottom brick. But I call the lower low or the lower high the Dinmok death touch, because it's usually the sign that the massive rally on whatever stock we're looking at is nearing a top. So I said, looks like the short-term top is in. Big money never came to the rescue, and the BX trender closed with lower lows. I'm not short, but I'll revisit Nvidia at $100. Right now, we're trading at 105.40. So when we look at Nvidia and we look at this setup, this, if we close with another lower low, is not a good sign. And I think there's a couple of ways that this is going to play out. The first thing is that price is most likely, in my opinion, going to sell off one more time back down into that smart money level. Potentially this time, I think it's going to come all the way down into the smart money range. So when we look at these Fibonacci levels, and you probably hear a lot of people talk about algos and turning the algorithms on. Within a market cycle like this, we have two key areas to watch for. The first one, like we said, is the golden pocket. That is the 0.618 to the 0.786. Traditionally, this is where big money and Wall Street are allowed to start buying. This is considered the institutional buy zone. Now, 10, 15, 20 years ago, that was the level that you would buy at, and then you would set your stop loss at the optimal trade entry. But now that the algorithms understand this, and now that big money understands this, instead what they do is they set the institutional buy zone, and in most cases, they will let price come back down into what I call the smart money zone. The smart money zone is the bottom of the golden pocket, the 0.786, down into the 0.82. This is usually the level where they will kill every long player, drive price back into that support level, purchase it up at the bottom, and then play that continued move. And I think that that's what we could see here with Nvidia. If price rejects off of this level, sells back off into that lower low, we'd hit $86. There's so many people who would get stopped out within this range. And I think from there, there's a very good chance that we bounce once again, maybe selling off and having a bear flag until the end of the year, or the off chance that we get a massive rally on Nvidia into the end of the year, depending upon how earnings is in November. But I do believe we're going to see a continued sell-off, at least to $100, most likely down to 90, and worst case, 86 bucks. The last thing I want to show you before we hop off is that market structure in these Fibonaccis that I show you guys work on multiple timeframes to the upside and the downside. We understand that by market structure's point, we are holding here, but look, if we actually take our Fib retracement from our most recent swing high down to our most recent swing low, you'll notice that this area of rejection was right within that smart money zone. So if you would have entered short within this smart money level and you were to have looked to take your profit down at 92, stop out at $133, you'd be doing very, very well right now. So we'll see how the rest of this week plays out. And who knows? As of now, after hours, we're down another $3. So I think worst case, we're seeing $100, maybe even $92. Thank you guys for watching the video. If you want to trade alongside of me each and every single day, get access to all of my real-time alerts, private live streams, as well as a trading community of over 800 other traders using the same exact strategy that you see here each and every single day. If you want to join the team, you can use the link in the description to join the private mentorship group. If you don't feel like you're quite ready for that, then take advantage of all of the free courses that we have on our website. Thank you guys for all the support, and I'll see you next time.